Now, real estate, of course, has been a big driver, right? I mean, uh, real estate has done well, stock markets have done well, and kind of both have fed into each other. Macrotech Developers is, of course, the leading company out of the city of Mumbai, and we have the management with us. Now, they continue to deliver on that 20% sales growth target, so no problems there. Abhishek Lodha is with us, Managing Director and CEO at Macrotech Developers. Abhishek, good morning. Great to have you with us here. Thank you for your time. Prashant this side. You know, before I get to the numbers, if you allow me, let me start with some of the news flow, which, of course, I think a lot of the investors would like you to address as well, which is this case in the High Court, which has been filed against the house of Abhinandan Lodha, and this is a brand dispute, Lodha brand name dispute. Could you just outline, what this is about and what has happened, what's your thinking, and what's your position really, Abhishek? Go on.
Hi, Prashant. Good morning, and thank you for allowing me to be with you today. The dispute, let me first set some context. Abhinandan Lodha is my younger brother. He is someone who I wish and have always wished the very best for. And I hope he continues to be successful in whatever he wants to do, including if he wants to do real estate. So that will, set the context of where I am as an individual, as a person. All the mudslinging and other usage of the media is very painful, and our family will not be part of that kind of an effort. It's a simple dispute in relation to the very valuable brand that we at Lodha and Macrotech have built up over 40 years with thousands of crores of investment and tremendous goodwill in terms of our pedigree, projects, as well as the integrity in which we operate. This dispute is not dissimilar from the recent dispute between Indigo and Mahindra when it came to the usage of the term 6E, which is not even Indigo's primary name, but probably something less than that. So I think the courts will take their own view. I reiterate that I have no desire or in any manner to do dirty washing of linen in public. For the last 10 years, I have kept everything private. The company has been through big downs, and now it is doing well because of the efforts of 5,000 Lodha associates who work day and night to make this company successful. And we let the legal system of the country decide who should be very clearly using the Lodha brand and why the consumer ought not to be confused that any other developer using anything which is similar to Lodha is allowed to operate in the marketplace.
Okay. No, and you've explained it very well. And absolutely, you've kind of sort of, you've been down, you've come up, and of course now you've been doing very well for the last many years. So, the brand is, of course, all out there for everyone to see. Abhishek, two or three points. It's at the end of the day, some will argue it's the family name, right? When you gave the example of Mahindra and Indigo, but this is, this is the family name. So as part of the family agreement, right, there was a non-compete, which of course finished, etc. Was there anything in the family agreement which makes this clear that, Abhinandan cannot use that brand?
Prashant, I would let the legal process take the view, but I can directly answer your question, and I hope we move on to the company's performance, which is far more interesting and valuable to discuss. But I can tell you in no unclear terms that the family agreement explicitly stated, and that time we were a private company. It was well before we became a listed company. It explicitly stated that all brand, IPR, trademark, copyrights of the group will exclusively and solely belong to Lodha Developers or Macrotech as it is known now. And Abhinandan or any new business that he starts cannot use, and I emphasize these words, cannot use the same in any manner whatsoever. But I think we should end this discussion because the courts will take their own course. This will take a few months or years to finalize. Let's move on to the company and its performance if we can.
No, absolutely, absolutely. And I just wanted to address that right at the outset. Let's get to the numbers now. Nigel.
Well, Abhishek, all I want to tell you all is hoping for a smooth resolution, and, we'll wait to hear from you on that. But enough said about that issue. Let's focus on your numbers. Now, your pre-sales guidance, I think, for the year was around 17,500 crores. You've achieved close to around 73% of that. So for the year, do you want to outshine what you had given us earlier, or do you think you'll end at around 17,500 crores? And also comment about this perceived slowdown. Are you experiencing it?
So our numbers for Q3, this was our best ever quarter in terms of sales, our best ever quarter in terms of collections. We came in with sales of over 4,500 crores. And at this point, we are very confident about meeting our guidance for the full year. You would also note the strong underlying profitability. Earlier at the start of the year, we guided to an embedded EBITDA margin of 30%, which is now approaching 35%. You'd look at our debt reduction in spite of very significant investments in new land and business development. Our debt has reduced by almost 15% this quarter, and we are now at a debt equity of 0.22, well below our ceiling of 0.5. So all in all, there is a very strong underlying momentum in the business. We like this predictable business. We don't like to have choppiness in our sales or in our progress. And that's driven by having a very granular, diversified business, which is spread across 40 operating projects. No one project contributes more than 15% of our sales. And that's what allows us to have consistency in our performance. I have read with some interest the various media reports speculating on whether there is a real estate slowdown on the way. All I can say is that the real estate is part of the larger macro economy. And if there will be an urban slowdown, then eventually there will be sooner or later some impact on housing and real estate. Having said that, I think real estate is in the midst of a very long 15-year cycle. We are only in year 4. And as I've said in the past, there may be 6 months which are not a straight line, and that's par for course. But if I look at the fact that today what's most important for the consumer is the brand they are buying from, and the supply from the big brands in the country will never be able to meet the demand, and there will always be a big supply-demand gap.
Abhishek, and glad you said that. And you called it out early in that sense, that long cycle, and hope it plays out because it's so integral to many other parts of the economy. But at the margin, even cyclical, in terms of the cyclical, a few quarters, not straight line, as you described it, could you tell us where is this showing up? Because you'll get straight up signs, right, before anyone else. This slight urban slowdown. Which segments is it showing up sharply?
Prashant, we haven't seen the slowdown. When I refer to the urban slowdown, I refer to all the news reports about FMCG sales in urban areas being slower than expected and so on. So we haven't yet seen it. You'd have to recognize the fact that the housing consumer is not really the full urban consumer base. It's the upper end of that urban consumer base. And we see that continues to remain quite robust and strong. But all I'm trying to say is that, ultimately housing is a big contributor to the economic growth, and it's also a big beneficiary of economic growth. So it can't remain unrelated forever.
Abhishek, just finally, you've mentioned that, the market is still booming. Leave us with an outlook on pricing, specifically in, some of the key pockets, like the MMR region where you operate. In general, say over the next 4 quarters odd, by how much would you say pricing can appreciate?
We've maintained this consistently, that pricing growth should be below wage growth. We've delivered that consistently since our IPO, and I think that's what's leading to the sustained strength in our business, that we've not chased pricing when we could have taken bigger pricing increases. Our expectation for the next fiscal year, fiscal 26, is that price growth in other markets that we operate, which includes the Mumbai region, will be in the range of about 5 to 7%. And that will be about 200 to 300 basis points below wage growth, which means that affordability will get even better. And yet those who have already bought homes will experience the inflation or slightly above inflation growth in values.
All right, we'll leave it there, Abhishek. Thank you very much for joining us and sort of explaining all of that and sort of running us through what you make of the market situation right now. Appreciate it. Well,